Hi, good evening, everybody. Welcome back to another class. So, so far we've been doing um everything from starting at specific points. That I think personal, but then to lay more emphasis because of the fact that I understand that some of them, I think most people actually go through recordings and more people attend live classes than the number of people that would go through the previous conversations or answers to questions and all of that. Okay. Now, for start point, the essence of stacking is just to be able to open more positions. I explained that earlier. The reason why at entry, now there are two types of traders, right? When it comes to synthetics, there are people that are trading to grow accounts, and there are people that are trading to flip accounts. And trust me, it can never be the same approach. When you're trading to grow your account, you're going to trade it just the way your currency pairs, which is like price mitigates your entry, and then 1:5 straight to 1:5, right? If you're risking $100 at entry, at stop loss, at take profit 1:5, you're making like 500. That one is complete 1:5, right? But then it's different if you're doing this thing. It's very different if you're trying to flip. Now, the main reason why people that are flipping now are stacking is just because they're opening more positions. You see, somebody asked another person, why do you see negative balance, but then the people are still in profit and all of that. The attention, but you see somebody post their trade screenshots, and then you see margin be balance -$5 or minus something dollars, and then at the end of the day they are still like in profit. Let me see if I can quickly get an example, or why I'm doing that. If somebody has an example of balance, just send it to the group. All right. Now you see people who have negative balance, but then they're in what? They're in massive profits. Something like that happens as well. This is because of the fact that they have running profits. So the entire essence of stacking at specific points is actually let me send something now to the group from Dr. Faludun. Okay. So you guys just check the announcement group now for something just like this. Okay, let me send to the announcement group instead. I think that's where everybody now if you go to the announcement group on Telegram, I just uploaded something. If you look at it, for the one that says balance, now the balance is $4.87. All right. Now that $4.87 means the amount that is in your account, meaning like when he funded that account, now that was like a $5 account, or maybe he funded $10 and he lost $5, but then the balance was what? At $4.87. That was the initial balance of the account before those trades were open. All right. But then you can see equity at $23. That's the running profits plus. But then if you look at the free margin now, it's minus 6.27 because of the number, like the lot sizes opened on that particular setup. Do you understand? So what I'm trying to say is that you can have like a balance $2. Meanwhile, you're controlling a margin of like $30 because you're on that trade with your profit. So the essence of stacking is to be able to open. Let me, for a better example too, if you look at something just like this now, which is this particular trade, this one as well, you would notice that it was $220 to, sorry, let me see if this would save and how fast it would. All right, you realize that this particular trade was $220 to 7,500. All right, but then the balance was what? The balance was 220. Then the equity was what? 7,575, because there was what? 7,351 running, and then the margin was $3. That was the margin. Okay. Now, what I'm trying to explain to you is that the essence of stacking is so that as your trade is moving in profits, you're able to open more positions. Calculate the number of open positions in that particular VIX 100, which is the second screenshot I just sent to the group, which is like a video. You realize that it was 20, 40, 60, 80, 100 lot sizes in total. You can't open 100 lot sizes on a $200 account on a normal note on VIX 100. A very little move is going to take you out. All right. But then, because of the essence of stacking, you can actually open some level by level. If you realize the first trade was open at 1983, and then the next engulfing was created, the second trade was open at 2001, another engulfing, the next trade was open at 2020, another engulfing, the next trade was open at 2062, then the last trade was open at 2111. You realize that there are different levels, and that's the essence of stacking. Okay, you just have a $200 account. Price is progressing. Your $200 is currently at 1.5. Then you're opening more positions with your profits in that. That's with the I already taught you guys how to stack at engulfings that are in the first 50% and how you can stack at them. You close far apart from each other. You're waiting for mitigation. If they close at very similar levels, you're doing what? You're just trading them. You're just trading with the continuation and how to set your stop losses. You realize that each of these positions have their different stop losses and they have their different entries as well. It was only one position that was opened at the initial entry, which is what the first one that was opened at 1983, right? That first one was opened with what 20 price. And then as price progresses to the upside, another engulfing is created, open at the next stacking point. Now, as that stacking point, let me just share my trading view as I'm talking. First, like this now. This is the entry now. All right. You've opened your first position at the entry now. Okay, you've opened your first position at the entry. And then as price is increasing, this move now you'd have made up to like, let's say you have probably $700 running already on 20 lot size or even more than say. You have like $700 running already, and price creates the next starting point. Now, using some of the money from that profit, now you understand that when you have $700 running, when you have $700 running, and then with a balance of 200, your balance is no longer 200 because your equity is going to be reading like 900, which is your balance plus the profit that is running, which means that you have like about $900 now to open more positions. Do you understand? So stacking with part of that again, stacking at another engulfing with part of that now gives, as price is increasing now, you are watching another profit again. Now opening another one now, you're with another profit. So the essence of stacking is just to be able to open positions with your profits. Do you understand? Because necessarily now it's entry now. Nobody can, or you cannot open 100 lot size on a $200 account size, like $200 account, and you're opening lot size once. It's really, really like almost impossible. A little move to the downside and you are totally gone. $200 is too small to pull that kind of move. But then opening 20 and as price goes on, you're opening more. This time around it's a bigger account size. You understand? So that's the entire essence of stacking. But then it makes it more risky than the one that you just like go set your entry, your stop loss, your take profit. Do you understand? So it depends if you're trading that particular account to flip or if you're trading that particular account to grow. Do you understand? So if you're growing your account, you just do the usual. Or you set your entry, your take profit, and then you stop loss, and then the trade goes its way. But if you're trading that account to flip, it means that you need to have these re-entries. You need to enter these re-entries. Do you understand? Opening more positions with your profits. And the main reason why I told you that at the first entry, you should enter with 50% of your risk is because of the, in cases of pullbacks, so that you experience pullbacks. Do you understand? Synthetic is very volatile. And I even think for some of us, like the tier one traders, they increased the volatility rates this morning, right? It's no longer it's now reading 4,000 on some pairs. I'm going to show you guys I'll show you guys the email. Realize that the volatility rate even increased, but then the risk is still the same, which means that it's still the same risk, but I take profits more. I think 4 times more than the usual. I don't know if this is for everybody, But I think they just sent the email to specific people. I'll probably share it and check if you got it or not. All right, something like that. So realize that as beautiful as it's also risky, right? So whatever works for you is what you can do. If you're thinking of flipping, it's not an entirely bad idea. All right. If you're thinking of going, that's also beautiful as well. All right. But then you need to make sure that you backtest this thing more and more to make sure that you're used to it and then how it works for you. Because there are some pairs now. I told you guys that when it comes to pairs like 10-25, I know that okay, once they meet true. I prefer to start on 30 minutes. There are pairs that are like the 175 pairs that you can see enough starting points on the 1 hour, right? So just between 30 minutes and 1 hour, these are just things that I'm telling you how I do it. But then when you're studying, you're going to tweak in some things that work for you. All right, you're going to tweak in some things that work for you, like just check in one or two, just like that. Okay. Now, I was looking at this particular pair, this CHF JPY. I had a POI on it that I missed, by the way. Sorry, when you guys see me, I don't know why my chat is reloading.
Yeah, we can hear you.
Okay, I just wanted to make sure that my network is still good because I was no longer seeing my chat. All right, so I was looking at something on this JPY that I missed, but then I realized that it was going to serve as a very good example for me. So that was why I just mapped it out and kept it. Now, if you look at this particular structure on this CHF JPY, price was coming like this bullish. As you can see here now, we had what our typical type A setup. Here we had type B. This entire move was just chain of entries. All right. Here we had the type A setup at this point. Okay, this is type B actually, because price created the inducement before it left the price created the inducement before it broke structure. All right. So this is type B structure, and then price came back to it, creating what another type B. The next one that was created was a type A. Okay, literally, this was the next one. That was a type A, but I think okay, mapping out from here, the candlestick, this would have been a type A with structure, but then continuing, price did not come back here. But what I want you to pay attention to is the fact that we kept on having what series of higher lows and higher highs, lows and higher highs, signifying that what the price is in an uptrend. Okay, and then something happened there. This is the last higher low that was created. All right, it was the last higher low that was created with higher high, and then this higher low was mitigated, but something happened when price broke above it, meaning that at the point that price went below this protected low, which is by putting in this new low, we now have change of character at this point, right? And I told you guys that when you see a change of character, the next thing that comes to your mind is what? A change in trend. If it gives you if it gives you what? A confirmation just this. And this is now going to bet the very important question now. For somebody that at the point whereby, let's say this has not broken structure, or let's say this has just like stopped here, that's just stopped here. This was the only price action we had. Price has not created all of this now. What will come to a person's mind is, okay, you're looking for demand zones, right? And then this will become what? The demand choice. This particular demand area down will become the demand zone of choice. And then the next question is now, like when price changes character just like this now, and is pulling back, because of course now this is the way that price will pull back to your POI. Let's say for something like this, if you have a sell POI like this, which looks just like this now, this is how price is going to pull back to it. Let's say it does something like this, which now begs the question, is this a new trend, or how do I know that this is to continue this previous trend? All right, how do I know that price has changed character and this is a new trend, or how do I believe it's just what a continuation of this particular demand zone, of this particular supply zone, more like this now, to now do something like this? All right, now yes, what I want you to understand, the moment that you see something like this now, it is actually a new trend that has been created. But don't get me wrong, when price, one of the things that causes a character is mitigation to a previous demand or supply zone or exhaustion of a particular trend. That's when you say something is exhausted. So it's either mitigation to a demand or supply zone, which is what causes it majority of the times, or probably the trend is just what exhausted. So this causes what a new trend, so that's change of character to happen. But most of the times, it is what price mitigation to a supply or demand that creates what the change of character, which means that our price is coming like this, a new trend has been created. As a matter of fact, if you look very closely at what happened here now, this was where price, this was a supply zone that most people would have even caught sales from. Happened here. Most people would have caught sell positions from this place. This is like our type B, all right, which was what very valid to sell for as at this point. Because why? Price had initially put in this change of character. I had to do what to give you another break of structure after the change of character. And then this was like the inducement before price was broke out of the break of structure. So something like this would have been what valid to sell. But then that is why I told you that you have to pay attention where price is coming from and where price is going to. In a case like this, now if you're taking a shot like this, where would be your target? The target would be what demand zone. Because of course, every demand zone and supply zone in the market, usually when they look valid, they have the tendency to send price backwards, back up. All right, that's for demand zones, supply back down. So in a case like this, now price is retracing back to this POI, but then it has created a change of character and has confirmed the change of character just like this. All right, something just like this. I told you what you need to know or what to see to know that that point of interest is valid to now buy from is price taking out the previous lower high, just like this now. Price taking out what the previous lower high, just like this is the point at which you should now start looking out for what for buys. In a case like this now, this is now what another change of character. All right, meaning that this demand zone is what a demand zone that is about to hold. So something like this now, another change of character, and then what continuation in trend. All right, continuation in trend for more buys. Something just like this. If not, this has now what resumed a downtrend because there are chances that price can do what something like this. The price can do what something like this. Do you understand? So as price approaches that your valid demand or supply zone, you have to wait for what this internal break of structure, this lower highs, or in the cases of an uptrend, there was the lows as well. All right, you need to see these things being exhausted, being taken out. Sorry, for you to say, okay, this is not what a change in trend is, just a towards entry. All right. Now, if you look at what happened on was it what was that crypto pair? I think it was BTC. Let's look at the crypto. All right, if you look at BTC USD on the 1 hour time frame, you would realize that here we had our type B market structure at this point, and price came back for pattern confirmation. But the pattern confirmation was with what? With type A market structure. All right, we had an entire order block at this level. Type A what market structure, just like this. This was what price mitigated. And even on the 15 minutes time frame again, we had something like a type B here. This would have been for those of you that are scalping, this would have been another re-entry again. But if you look at what's happening here now, it's still what's the same thing that I've taught you. This was an indicator, and this was what another sweep of market structure at this level. Price went ahead to take out this high, then pulled back to create structural liquidity, then came back again to what break structure, and then pulled back into it, run to the. If you realize BTC has been bullish for most of the time now, I think for the past 2 days now, you've been experiencing what's new highs. And this is that most people would have caught. Even I think David students, he caught these highs on BTC and gold as well. He's been holding them for a while. If you look at this point again, this would have been another part the sweep of market structure here, then price broke out, there was a structure of it, and then pull back to entry. This is the 1 hour time frame. Even if you had gone to the 4 hours time frame, you find out that the 4 hours time frame validates what all of us is what still very much bullish. All right, let's go to the 4 hours time frame. It is still what very much bullish before the entire run started. You can see the run on the 4 hours time frame using um uh I had this too in my favorite that to check the percentage yeah price range. Yes, you can see that it has done about percent increase from our very last entry opportunity. All right, this is like about 12% from that point. You're leveraging 12%. You know, even 12% on sports is crazy. Talk more of if you're leveraging 12%, or if you're making 12%, or if you're trading 12%. So this is like if you're trading, this is a very good RR. This is nothing less than 6 to opportunities. I told you, even if you're unsure of a demand zone, all you have to do is wait to see what that demand zone creates. All right, which pattern confirmation. If you're unsure of a zone, just wait that zone creates. A lot of you, some of the I was going through the losing trades as well, although I think it's lesser than what I saw last week. You know, the mistakes are lesser than what I was going to trade this evening after answering the questions. Then I realized that some of you are focusing on the pattern. All right, as much as recognizable or better analyzed as a pattern for easy recognition, the thing it has to be solid, have a solid narrative behind it before you trade it. I can easily go to any time frame. I'm telling you for sure, right? I can go to any time frame, even as we are on. I can start from the daily time frame and 4 hours time frame. From the 4 hours time frame to the 1 hour time frame. Not even 1 hour. From daily, I'll go to hours, I'll go to 3 hours, 2 hours, 1 hour, 30 minutes. I'll go to 15 minutes, I'll go to 5 minutes, I'll go to 3 minutes. And for each of these time frames, I will show you this pattern. I'll show you it happens anywhere. Like it happens even people that are trading 20 or 8 seconds time frame, they can spot out this pattern for you. But that's the thing. If you're trying to recognize it, it means that but then it's not tradable just like that. You need to have a narrative before you click by yourself because of this pattern. It's not just because are you seeing it matters a lot. Where are you seeing it? How are you seeing it? Do you understand? If you can use it anywhere now, if you go to 5 minutes now, you still see it. If you go to 15, if you even go to 1 minute, trust me, if this trading view was subscribed, I will go to seconds time frame, you see it there. It is there. But then that's the important thing. It's not just about seeing it. You need to have a narrative behind it. You understand? To have a narrative behind it. That's why I talked about validating it on the 4 hours time frame. Just about spotting if it was just about the entry, then everybody would have been making millions now because the entry was everywhere. You just close your eyes and open it and you probably see it somewhere. And it's every currency, even in this is literally every. But it's not just about the entry model. So it's not like you just hop on the chart and then you're looking did something similar to what Star showed us in the previous class. You need validations. You need to validate them very, very importantly. Very importantly, I told you that when you go to the 1 hour time frame and you spot this thing, I even emphasize on 1 hour because I know that okay, if these people should focus on the net, that they won't be counter trading. Not a complete call yet. I'm just sure that if I saw a lot of you would not be what counter trading yet. or a lot of you will not be looking on the thing. Somebody was telling me, oh, star, to trade 5 minutes, will not see trades every day on the 1 hour. I've already said that on the question group, I think. I can't remember who exactly. I'm not looking for trades every day, being very honest with you. You need quality trades, not quantity. If you're setting out to look for 20 trades in a week, you would find. But then the most important thing is at all of these trades, like the end of the day with all of these trades, there are people that trade just for 3 times a week. I promise for me, 2 times a week, I 2 times a week. I can see my trade setups only 3 times a week. Sometimes I can even see one. Sometimes it can be laziness of me not checking through all of the pairs. Sometimes my this. I'm just trying to tell you that you can be profitable with very. It doesn't have to be 25. With 3 solid trick, you're good. 3 currencies, six synthetics, one currency. Like it's not about the quantity, it's about so you need to take out your time to spot out these trades. You need to take your time to spot them out, to spot out the patterns good on the 1 hour time. So I already gave you guys 6/6 validations. I think it's like 6 validations or 7. All right. Then whenever you see like when somebody sends something to a subtopic and then somebody else is having mind you that is in the discount, this is in the premium. It's looking like as if they are and you're not. Do you understand? There are things that are just takes so long as you've been attending the class and you listening to recordings. There's no liberty for missing classes, but then listening to recordings are very important. Even people that attend classes, I still advise them to go back again. There are things that you'd catch. There are things that you'd catch, and some things are like it's really really crazy when I see a trade idea, and then somebody else is having to tell them that this is in the. Somebody else even had to correct somebody that this inducement, if I've not shouted inducement in this class, I think it's the most said word, right? I've said it more than 100. Um, I think demand and so keep on saying that your inducement must pull back into 50%. It pull back into 50%. The day that it does not pull back into 50%, use that money to go to an orphanage home. Them they will tell you thank you instead of giving it to the market. If 50% and you still feel like trading, take that money, call your mom, dad, call your sister, send it to them, or send your account number. Better than just losing it to the market. Any inducement that does not pull back into 50% is your money that will pull, that they will pull into the market. Like they will take your. It is very risky. I don't think there's anybody that I know and I can vouch for that will teach you liquidity and inducement and will tell you that your inducement should not pull back into discount or it should not pull back into premium when you're selling. The essence of this inducement is deception. Actually, that when you picture inducement, what should come to your head is deception. Deceive somebody. It has to love you. Most people know better than at the premium. Trust me. Even people that come into trading that are just learning how to trade, they already know that okay, tell them that you're buying at discount and you're selling at premium. That's yeah. So most people already know better than buying at premium and at discount. So this inducement level have to be very tempting for people to actually try to buy them. They need to be liquidity to be swept. If not, you will be the this inducement needs to pull back. I don't want to be seeing setups look that will look like this. I don't know who you ask this thing for. It's frustrating. When I just see something like this, I'm just like, is it that you love losing money? Like it's really terrible. If you don't see anything to send, trade idea group, go and study, rest. Don't see tomorrow, you see. If you don't see next tomorrow, it means that you're not looking at many pairs. You're probably just like at least in 3, 4, 5 trading days. You can't week. without seeing a trade setup, all of the pairs that are in Forex currency. But I even think I might have deleted some of these pairs. It's not possible to go through all of the pairs and you don't have to trade. That's the absolute truth. So why forcing? Why forcing trades in a week? At least you should see one or two things to do. All right. So it's of little setups. Any setup that you're sending to the trade idea group and with when I don't want to review a setup and say an avoidable mistake, particular person. I think after this class, if I'm going to message you guys, saying to me, so this particular guy, like an other block like this field, um, he had something just like this. I think like this. Yes, it was something like this. And then this set this place as the entry. This was where it took a buy from. Really understand that this particular inducement pulled back into 50%. And in fact, I'm not even representing this sweep yet. I'm not representing this sweep fine because it was a very, very clear sweep. And this would have been what you and price, what the price do? Price took him out and mitigated that particular zone. The person I'm talking about, you know yourself, you even updated it again that price took you out and we from the history. Like most of these things, I feel like at some point I'm starting most of you seeing it like looking for POI is very closer to where price was. But that's not the best thing to do because at the end of the day, price will come to your and even if it does not come to your POI, maybe it's waiting for to use it as the last point of true mitigation. Price leaves the POI and continues. Price is continuing, like you're seeing newer price action. See what those is form is tradable. At the end of the what more opportunities being created. So if you look at the chart and you're not seeing something for the day, let me look at another pair. Maybe a pair that has okay. Let's look at okay, NZDJPY. Now if come online, this is NZDJPY. I'm just looking at this now. I've seen like one or two opportunities that I would have taken this week if I traded this pair. If you look at this, something like a type B occurred on this point, right? And even on meet, this was what another type B that was created. You can see this another type B setup that was created, all right? And back to it as what pattern confirmation. You can see we had what it can be here. Like something just like this, you would see definitely what you'd see quality trades. The only thing is if you're looking enough, you're looking at what place are you looking at. So there's no need compromising that if you have a trade setup and you have an balance as a threat below it, look for a pure because this imbalance is a price magnet. The way that imbalances work, I told you that in the market they are both what buyers and sellers. So which means that if buyers have 100, sellers are above 80, it should be almost equal. Do you understand? So in the case where buyers have like 90 and sellers are 10, the market will want to take buyers to at least so it's at least 70 or 80. So for every move that buyers make in the market, there should be what almost an equal. That's why even in an uptrend like this now, as price is moving an uptrend, you still see it. As price is moving an uptrend, you still see what they retrace. As price is moving, the retracements. This is to ensure balance. There must be buyers and sellers at every time in the market. So when you buy, you now price buying. Your expectation or your anticipation is that price is going to what pull back to fill that void, that gap, that way filling the imbalance. So imbalances are like price magnets. Seeing them before your entry, so price is going to pull back to fill them to at least every imbalance on the chart must, if they have not been filled already, they must be filled. If you look at this particular one now, at the point that this entry was created, let's say this was the point at which price swept, and then what happened to do what create this particular before breaking out. Right now, if you look at just like we had what this bullish one at this point here. This the price did what came back to fill. This is our balance before this entry now. This was another balance before the pattern formation that back to fill. All right. And if you look now at this point again, even this bearish run buyers doing anything in the market. That was what an imbalance. The price was few even at this point. So all of these imbalances that are being created, you can see the candlestick now was created, and then what happened? Price came back to fill it 800% though, but this filling was more than 60%. Do you understand? Everybody in the market, there must be a retracement to at least 50%. So having an imbalance before you just gives you this understanding that okay, price can pull back to this to mitigate my entry while feeling this imbalance. Seeing an imbalance before your entry is good, but seeing it below your tells you that price can take out your entry to feel that imbalance. And that's why I told you that whenever you see an imbalance, a clear imbalance that is if you pour your entry, play confirmation. If pattern confirmation, not even candlestick. Forget about it. Imbalances are very powerful. When it comes to hierarchy of PDR, I didn't teach you guys FVGs because I don't trade them actually. But when it comes to that, like you realize that these things have power. There are people that if you go to there's an indicator called FVG by Nephew Sams. Let me just use keyboard. The fair value gap, which VG by Nefisam. Oh, okay. Sorry, majority view already expired. Don't worry, in our next class, I'll make sure to emphasize on this one. If you got VG by Nefisam, she just automatically spots out you realize that there's always what the price reaction to this VG. Price always what attracts is usually attracted to it. When this so seeing it below your entry is not good at all. It gives you study that price can most likely will take out that entry. So in a case like that, pattern confirmation instead. All right, something just like that. Like that, most of this are avoidable. But then at this point, you're all like, that is why I'm like calmly table. All right, and the winning trade subtopic, and I think the trade idea subtopic. Them sometimes I scroll through the chart and I want to see which trades are people losing, what winning. This is how you learn. You go to these setups and you see, okay, what did this person see today that I didn't see? Do you understand? What did this person see today? Sports. Did this person do it well? I think I would have I was the one. Nelson mentioned it. I never even knew. I was used to gold. I think I used to hear gold. I don't even trade gold a lot, but then I used to hear gold. I silver. Somebody mentioned this. Checked out the platform and I liked it. All right. Even when it comes to indices too, it was Wednesday that introduced me to indices, and then I realized that okay, this has what and this is how you learn. Looking at what people are doing, that is the advantage. In fact, to be honest, that is the major advantage of this some mentorship. The difference between this and a private mentorship was affinity to learn from as well, to associate with. So far, you guys are doing well, but then it can still be better, Anything that you're sending, make sure that it's validated. Let it be that when someone asks you why that you met with your 6 criteria, this is non-negotiable. All right, anything you're sending was so I think we're going to tomorrow is Saturday. We're supposed to meet. I don't know if it's tomorrow, but we're supposed to meet tomorrow. If we don't meet tomorrow, day, but then there should be chances to meet tomorrow. So when we meet, I want us to do like quick revision, more like a top-down analysis on both aesthetics and also introduce prop firms because you realize at this point I've noticed that some people have started executing already. I need to explain the concept of prop firms, advantages, and all of that, and how to prop accounts and the rest of that. All right, that should be our next step. Maybe a top down, then prop firms before we now move into conclusion and all of that. But so far, it's amazing. I appreciate if the subtopics are being that there should be just for trade ideas. If you don't drop them on the playouts, you should drop them on the winning setups. If they don't, the setups, not the chat and discussions or all of that. You understand? Be strictly for what they're supposed to be for. Okay. So the recording is going to be sent to the Telegram group. Stan, there are high chances that going to do like a short pre-recording of stacking again. Maybe this time like a live price action. I don't know if it shoots in, then I'm going to pre-record and send on the business group and then announce on the main group as well. Okay. So if you have any questions at this point, you can drop it and I will attend to it tonight. Like most likely tomorrow by 9 p.m. But please, if anything comes to us before then, all right. So I'll see you guys again soon. Take care of yourselves until I meet.